Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 29th of September. OPEC announces a deal is likely in November. Oil prices and commodity currencies such as the Canadian dollar, the Aussie and the Kiwi surged yesterday following the European market close after OPEC said that its members reached an understanding for a deal to cut oil production but did not actually finalize an agreement. The organization proposed to collectively cut its oil output by approximately 200 to 700k barrels per day, but many of the details are still unclear, and the group said that it will agree on the specifics when it meets again in November. Iran will be exempt from limiting its production, given that the nation noted numerous times it would not agree to any deal until it regained its pre-sanctions market share. OPEC will try to reach similar consensus with non-OPEC producers as well, but some reports suggest that officials will negotiate with the non-member countries after the November meeting once the details of the OPEC deal have been finalized. Moving forward, although sentiment in the oil market may remain supported for a while, we doubt that this will lead to a major speculative rally, as nothing concrete has actually been agreed yet. Furthermore, oil prices may be even more sensitive to incoming comments from various OPEC officials heading into the November meeting. As such, we expect prices to continue trading in a volatile manner until and if a deal is finally sealed. In her testimony before the Congress Financial Services Committee, Fed Chair Yellen stated that the majority of the FOMC sees an increase in the Fed funds rate as likely needed this year. Aside from that, there were very few remarks on monetary policy, and thus the reaction in the dollar remained relatively limited. Yellen will also speak today after the US market close at a forum for banking and the economy, where we could see more comments on monetary policy. As for today's indicators, during the European day, Germany's preliminary CPI data for September are coming out one day ahead of Eurozone's print. As usual, Germany's regional CPIs will be released ahead of the country's overall print. Thus, we will look at the larger regions for guidance on where the headline figure may come in. The forecast is for the national rate to have risen, something that could raise speculation that the Eurozone's CPI rate may also meet its forecast for an increase. Something like that could support the euro. From the UK, we get the mortgage approvals for August. Even though this indicator is usually not a major market mover, following the Bank of England's aggressive easing package in August, it may attract special attention, as it will be a sign of whether or not the bank's measures have begun to make their way into the real economy. In the US, the final estimate of the second quarter's GDP is expected to be revised up from the second estimate. As the third quarter is almost over, we will treat this data as outdated. After all, the Fed has already made up its mind on monetary policy and refrained from hiking rates last week. This suggests that investors may now be looking forward for the first estimate of the third quarter GDP due out on the 28th of October in order to gauge the likelihood for the committee to hike in December. The final estimate of the core PCE index for the second quarter, the Fed's favorite inflation measure, is also due out. Besides Chair Yellen, we have four more speakers scheduled for today. ECB Executive Board member Peter Prel, Fed Board Governor Jerome Powell, Atlanta Fed President Dennis Lockhart, and Minneapolis Fed President Neel Kashkari. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.